Hi, welcome to my daily brief. Um, I'm going to be talking about two things today. I'm going to be talking about Forex and I'm going to be talking about the interest rate on savings deposit. Right, so those are the two things I'm going to be talking about today on my daily brief. So the first one, people have called me, Ugo, when do you think, what should I do with dollars? Do I sell it or do I keep it? Because I don't want to lose money. I find that really funny because people have probably these are guys that have probably bought dollars on the 400 and then now that it's they waited 470 they don't want to sell because everybody kind of thought that it was going to get above 500, but now it's gone below 440 and let me try and explain what's going on. So a few last week actually, the CBN issued some policies and said that they were going to start selling dollars to BDCs. That was the first circular they issued. And they were going to start selling $10,000 to BDCs and then they would sell at 386 Naira. But before then, there were policies that came, and one of those policies was that the CBN was stopping the sale of Forex through from M to third parties. So what it means is that if you were going to order something from abroad and you wanted to maybe open an LC, you'd have to go directly to the OEM and not through a third party. And then there were other policies that came before that. CBN also warned forex speculators and told banks that they were going to link them up with their BVN, and through your BVN and through transactions in your accounts, they know those that were probably round tripping. And then after that, they now said that they were going to start selling forex this week, yesterday actually, ahead of the reopening of the airports for September 5th. And that, of course, rattled forex traders because if the CBN pumps in money into the system, it was pretty obvious that the exchange rate was going to crash because the parallel market rate is such that nobody really knows the actual demand and supply there. It's a parallel market rate, so you don't have data telling you, look, how much liquidity that you have in there. So it's difficult to use that as a benchmark to gauge where the price of whether that's the actual price of the naira. But that's how it is. People would always benchmark price against where you have when the price is higher. That would always be the benchmark for exchange rates, and that's what it's always been. But now that you don't have liquidity in the official market, that is now providing like a semblance of what a market is. So think about it. If I need to travel and all I need is just to have my passport and I can just go to the any of these Travelex or to the bank and buy my dollars without force, why would I want to go to the black market? And why would the black market guy want to buy from you when, I mean, who will he even sell that to, right? So what that meant is demand is going to come down, and that's why you've seen exchange rate drop or strengthen in favor of the naira over the last few days, and it's likely going to be like that for a couple of more days. Now, I've heard people talk about sustainability. Can we actually sustain that? Well, that depends, and I'm going to tell you one secret, and the secret basically is, if you want to know where Nigerian exchange rate will be at any point in time, look to oil prices. Yeah, that's a fact. Nigerian exchange rate is perfectly correlated to the price of oil. So whenever oil prices crash or crashing, let's say by $20, $15, expect the exchange rate to drop. Another secret, open secret. These are open secrets. Second one is that long term, the Nigerian naira would always depreciate against the dollar. Long term. The reason why it's such a big deal in Nigeria is that it takes government a long time to decide when to devalue. So that makes devaluation look like one big deal. So like people kind of wait for it. But if you were in a country where government typically devalues occasionally because they know that the exchange rate is usually dependent on demand and supply, people will get used to it and just move on with their life because that today it might be 450, tomorrow it might be 420. People won't really bother too much. But where they hold on to it and they hold on to it, it creates that sense of arbitrage and that expectation to want to profit from it, and then people who don't really need to actually hold dollar start to hoard it and keep it. And then that exacerbates the entire situation. So two secrets. If you want to know whether oil prices, whether the exchange rate will be devalued or not, or whether the naira will be strong or not, just look to oil prices. That's it. And then secondly, the dollar naira would always depreciate against the dollar. So if you're long on dollar, which means if you just want to be keeping your money in dollars, then you really shouldn't bother yourself about what happens in the exchange market or not. At least, well, to a large extent, so long as the naira would continue to devalue against the dollar, that shouldn't really bother you that much, right? So, but if you have naira responsibilities and naira bills, you just want to just stick to your naira, man. I mean, honestly, that's how it is. Because except maybe you want to be converting the dollars and converting to naira and converting dollars, and maybe if that satisfies you, then that's fine. So, will the exchange rate, remain? Will it go back to 500? Like I said, look to oil prices. Right, look to oil prices. So long as oil prices starts to pick up and Nigeria is selling, then the CBN can have a little bit of buffer. And remember, they've taken devaluation hits already. They've already gone from 305 to 380. So that's heat already. So they've taken a heat for the drop in oil prices from $60 to just about $40 that it is today. So if the government is going to have to devalue again, then there's got to be a compelling reason, which would be oil prices going down, and perhaps maybe you have Nigeria been finding it difficult to sell oil. Now, there's another factor, which is foreign investors. If foreign investors don't come back in, but I mean, I think you can always attract their money. It depends on the kind of policy the government uses. So that's for Forex. Now for interest rate, I've got a lot of people call as well and say, "Oh, like, what's happening? What's this interest rate policy about?" So simple. The government says that banks must be able to give a minimum of 10% of MPR as savings deposit rate. MPR is basically monetary policy rate, which is the rate at which the CBN lends money to the banks, and banks lend money back to the CBN. So it's just the benchmark rate. So, but the government is saying, the CBN is saying rather, that you got to be able to pay you and I 10% of that as the minimum rate for savings deposit. So if you got 100k in the bank, or 10k in the bank, or 50k in the bank must be able to pay you 1.25% for keeping that money on your behalf. Pittance, isn't it? I know, but that's really what it is. A lot of banks, on average, usually give 3%, 2.5% for savings deposit rate. It's a cheap way of collecting money for the banks. But to be honest, it has its own cost for banks too, because most savings deposits don't really last. Even though you call it savings, people usually pull it out because it's not fixed. It's demand deposit, so people can always pull it out at any point in time. And it's almost like, to me, savings deposit in Nigeria is almost like a check account, because people withdraw it at any point in time, so rates are usually low. But guys, 1.25%. You know what I mean? That sounds like you are actually paying the banks to keep your money for you. Should I anyway? That sounds like you're actually paying the banks to keep your money for you, because inflation rate is 12.8%. So keeping that money in the bank, they're giving you 1.25%, but net inflation, the money is actually worth less than it is, fortunately. So what does that really mean? Because if you decide to keep that money in your pillow, same thing, still worth less. In fact, probably better in the bank, because you're getting 1.25%. It just means you got to find ways to deploy capital. How do you deploy that money? There's no need, you got to be able to work that money, sweat that money. What can you invest in? Maybe real estate, maybe mutual funds, maybe bonds. Treasury bills are not so much fun these days because the rates are also very low. Maybe stocks. It's about time people start to look in that direction as well, because dividend yields, that's the dividend they give you on stocks. It's probably about 8-9% these days, sometimes 12%, depending on the kind of stock you're buying. Foreign stocks, that's a good one as well. Agri-tech, perhaps. Cryptocurrency, if you love risk. But that's really the message here. Don't expect that if you keep your money in the bank, anybody's going to pay you for it. The era of risk-free high returns is gone. Alright, so that's my daily briefing for today. Kept it under 10 minutes. Watch out for the next episode. Bye.